The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Anytime I find myself thinking how much progress has been made in digital banking over the past 6 or so years, I stop to consider how much further we'll go from here. It feels like so much has happened since the paradigm shift brought about by the iPhone and the global banking crisis of 2008. No one knows this better than Anthony Thomson. Anthony is by any measure one of the most prolific banking innovators of the past 10 years. Anthony's the co-founder and former chairman of Rebank and the founder and former chairman of Rebank. As if that weren't enough, he's now the co-founder and chairman of 86400, a new digital bank in Australia. Over the course of his career, Anthony has raised close to $1 billion in investment and helped shape the current global banking landscape. What are the most important problems banking and fintech can solve? Are we thinking enough about the deepest customer needs or just iterating within existing financial services verticals? Let us know what you think on Twitter @Rebank Podcast. If you enjoyed today's episode, please take 30 seconds to leave us a review on iTunes. Thank you very much for joining us today. Please welcome Anthony Thomson. Anthony Thomson, welcome to Rebank.
Thank you very much.
So it's good to connect with you. I think you and I have met in person a few times. We're recording remotely now because whereas you used to be UK-based, you have for the past, some number of months now been based in the suburbs of Sydney. Yeah,
I've been traveling out here a week a month for the last 18 months or so. And I actually moved to Sydney about 3 weeks ago.
All right.
Sitting here looking out over the sea on a very pleasant summer's evening.
Lucky you. So you have quite the heritage in digital banking, which is kind of something to say, given how early we are, I think, in the whole theme. You and Vernon Hill founded Rebank in 2010. And subsequently, you founded Rebank, and now a new bank, 86400, in Australia. Maybe you could introduce yourself quickly, bit of background for the audience on how you come at this.
So I'm a marketer by background. So what I tend to do is look at market data for an insight that will drive an opportunity. And back in 2007, when I had the idea for what became Rebank, all the data told me that what mattered to customers was value, and all the UK banks seemed to think that all that mattered was price. And when you look at what customers actually mean by value, it's an amalgam of a number of things. Price is, of course, one of them. Service and convenience are equally as important to a lot of people. Transparency is important to people. Treating me as an individual, not treating new customers better than me as an existing customer, are all part of the value equation. And that's what led to the launch of Rebank in July 2010. Now, you've got to bear in mind that back in 2007, 2008, it was a kind of pre-digital world. And the way we could give that great consumer experience was through the physical branch locations. If you track forward to 2012, I saw the most seismic change in consumer behavior in 30 years of looking at banking customers, which was the move from traditional branch-based banking to digital in general and to mobile in particular. And that was what led to the creation of Rebank, which launched in 2014, which was the first bank in the UK, one of the first in Europe to be delivered on mobile devices. And I'm pleased to say that it, like its predecessor Metrobank, have been very successful. About 18 months ago, my wife and I decided, for personal reasons, we'd move to Australia. And in looking at the Australian market, an opportunity came up to get involved in the launch of a new digital bank here, and I was really delighted to do so.
What's the premise of the new bank, 86400, and how does it compare to Atom?
So the concept came out of again, funny enough, out of research that we were doing, which says that most people have a very difficult relationship with money. Consumers, by and large, are worried by money. They're fearful of financial transactions. Don't really like thinking about money. So the conceit of the idea is that we will use big data, data analytics, artificial intelligence to look at your money and how we can best use it for you every second of every minute of every hour of every day. And one of our engineers said 86,400. We said, what's that? He said, the number of seconds in a day. And it just encapsulated brilliantly everything that we stand for. And it focuses very much on that relationship with customers. So it's leading with transactional accounts, then savings accounts, and then loan products, mortgages, and unsecured products. Whereas Atom, we made a decision pretty early on in the process to focus on using digital technology, efficiency, and customer relationships to build out our play in the UK mortgage arena. So same concept of using digital efficiency to provide a better value bank for customers, a different outcome in the sense of the products and services that we're leading with.
I think one of the most interesting pieces to pull out in this conversation will likely be how your marketing lens has informed what you've done in the digital banking space. So if we look around, right, and think about the Monzos and the N26s and the Starlings, people are coming at it either from a technology heritage or a banking heritage, and thinking about how things can be done better. I think what you're saying, based on that introduction, is that the kind of driver of a lot of your thinking is the psychology of the consumer, as opposed to necessarily the practicalities of sending money, paying, interacting with technology. Is there anything specific?
Byproducts. Okay. Byproduct. To paraphrase Bill Clinton, it's the consumer, stupid. Everything we do is focused upon the customer. So it's not about how can we create a better product. It's about what does the customer want and how can we better meet their needs. And I think one of the great problems we've seen in banking in the UK, and I've seen it out here in Australia, is that the big banks have just lost sight of the customer. They think that they only exist to make money for their shareholders. I think that's a remarkably short-sighted view. I believe passionately that profit is a byproduct of giving the customer a better product or a better service or a better experience. Yep. And if you give the customer a better product or a better service or a better experience, and you manage your business well, you will be profitable. And of course, you need to be profitable because the people who put up the risk capital need to be rewarded. The people who work in the business need to be paid. You need to retain profits for investment purposes. So profit is important, but it needs to be a byproduct of doing something well for the customer. And as I say, I think most banks have lost sight of that. Some of the new banks that are emerging around the world have become much more customer focused. But I think, as you've rightly pointed out, there are a number who see technology as the answer, whereas I see meeting customer needs as the answer.
Mm-hmm. pulling together a couple threads. So conversations that we've had on the podcast in the past, a number of the developments that we're seeing kind of across fintech in the U.S. and Europe, with a few recent big raises by robo-advisors. It feels to me like we're on the verge of transitioning to a point, from a point, I should say, of product focus, and i.e. what can we deliver to the customer, to solution focus. And so much of where the meaningful advances in my mind seem to be coming from is from a point of what are the deeper problems that people face when it comes to dealing with money, whether it's banking, whether it's investing, whether it's insurance, and how can, via changing the way we think about those and building intuitive solutions, how can we help solve those deeper problems as opposed to deliver a point in time, money saving or cost saving or efficiency saving solution. It kind of sounds like your approach to 86400 is not dissimilar from that. And it would be maybe interesting to hear kind of you as a marketer, how you might think about that distinction between product and solution.
I think both products and technology are the means to deliver the solution. They're not the solution in their own right. So the solution is what solves the customer's problem. And the customer's problem isn't solved by technology or by product. It's solved by you identifying what that problem is and meeting the real needs of real customers. Now, what technology enables you to do, particularly digital technology, is to square a particular circle that's been a problem for banking for many, many years. In the past, you could either have low touch, low cost, or high touch, high cost. And you paid your money and you took your choice. Today, technology enables us to deliver at a very, very low cost a high touch solution. And indeed, all of the evidence and data tell us that consumers use mobile banking more than any other channel. I think the last time I looked at the UK data, it was estimated that more transactions were done on mobile devices than all the other channels put together. So it enables us to give a very high touch solution to customers, whilst also delivering low cost, good value products. So in the past, you couldn't have both. Technology has enabled us to do both. But the technology is not the answer. It's the solution that underpins the answer, which is giving customers better products, better services, and better experiences. Mm-hmm. The technology enables us to do that at a lower cost and with a higher touch.
Yeah. I think another thing that technology allows us to do is expand the scope of the services that we're offering. So whereas traditionally, banking was kind of siloed, insurance was siloed, investments was siloed, I think we're very clearly getting to a point where it's easier to offer more comprehensive solutions, and comprehensive solutions that I think help to address some of those deeper customer needs around decision making, behavioral finance, real deeper challenges.
That is what we would call. That is another way of describing open banking. Mm-hmm. And open banking, I think, is a fantastic idea. It's an idea whose time has come, but unfortunately, the world doesn't seem to be ready yet for open banking. And there are several reasons I say that. Firstly, I think we're seeing in the UK, in Australia, and elsewhere, countries that want to adopt open banking, it is taking, from a regulatory, technical, and specification perspective, much longer than everybody thinks. And it's not helped by the fact that the big banks are really dragging their feet over its implementation. Second thing is, The actual public awareness of the concept of open banking is absolutely tiny. People just don't know what is meant by open banking. It will come. I think it'll take longer to resolve the technical and legislative issues. It'll take longer than everybody thinks for consumers to be educated as to the great benefits that it can bring to them, but it will eventually come. The challenge will be that to make money out of it, and as I say, I'm not against making money, it's just got to be a byproduct of doing something well for customers. But the challenge of making money is, if you're going to take a clip on a ticket and a small clip on a ticket going through your open banking platform, you need to have an awful lot of tickets. You need an awful lot of customers. And I think the challenge for the new banks who are setting up to be, if you like, open bank ready, the first into the marketplace, the reality is the marketplace isn't yet big enough for them to be profitable. And I think it's going to take those banks and some that you've alluded to earlier have really bet the farm on open banking. And I think it's going to take a long time till it comes to fruition. And my concern is, will they have the capital to survive through until they can start making money out of it? Mm-hmm. I think some will. I think some won't.
So on the topic of some of the early wave, the leading digital banks, we're starting to see the likes of Monzo and Revolut and In26 and others kind of butt up against each other in certain markets. And I think we will very quickly see Robinhood and some others out of the States. Acorns recently raised a big round. In my view, they're moving. All those players are moving toward the same model. It's just a question of kind of different product hook initially to acquire customers. What's your view, your expectation as to how that competitive dynamic will play out? Are we looking at one or a small number of global winners? Do you expect it to be more segmented by market or by product?
I think you just defined the definition of a free market. It's great that there are more competitors coming into it. Great that these guys are taking on the big established banks. And the reality is the big banks have such huge market shares that the incoming banks have got plenty of opportunity over many, many years to take part of that share away from them before they start competing with each other. But it's right and proper that they do compete with each other, because though only those who have the best customer proposition, who offer the customers the best products, the best service, the best experiences, the best value, should survive. Nobody has a divine right to survive in banking. Unlike, I suspect, what some of the big banks think, the customers ultimately are the arbiters of who should succeed and who should fail. Yeah. Some will succeed, some will fail.
How quickly do you expect 86-400 to come under competitive pressure, perhaps from well-funded global players? Or do you expect the short-term challenge to simply be raising awareness for digital banking in Australia?
In Australia, the big four banks control around about, over 80% of the market. They are amongst the most profitable banks in the world. And as many of your listeners will be aware, there's just been a royal commission into banking behaviours determined by the appalling way that the big banks have treated their customers over the last 2 decades. So I think there's a real opportunity for us to be seen as somebody putting the customer first. There's a real opportunity for us to grow in that market. There's a huge number of digital adopters here, and I think there's a real opportunity for us. Will there be others? I'm sure that there will be, and we welcome that. I think the more competition there is, the more consumer choice there is, the better it is. Others will make consumers more aware that there's a choice. Our job is to make sure we're the best of the options that are available. So we focus absolutely on how can we give the customer a better deal.
As these newer banks start to grow and eventually mature, it's a highly regulated industry. Often there are requirements for senior management to come from banking, i.e., to have the traditional experience that the regulators expect to run banks. We've seen Rebank recently run into some issues, specifically accounting issues. It's a public company now. It's a multi-billion pound company. What's your view, as presumably more as an outsider at this point, as to the natural kind of progression of the leadership, the ownership, and the structure that's required to run a successful bank over the medium to long term, even if it potentially starts as a disruptor?
Yeah, it's been 6 years since I stepped down as chairman of Rebank, so I can't really comment on what's happened there. But to your specific point, I think that however you want to describe it, however funky you want to make it look, however many beanbags you want in your office, a digital bank is still a bank. And banks have fiscal and prudential responsibilities that have to be met. We are the custodians, the guardians of our customers' money, and we have to take that very seriously. And to manage that well, to manage the credit risk, which is the key determinant of banks, we need to have people who understand that. And the people who understand that tend to be from a banking background. So, of course, the question I often get asked is, well, surely you're just like the other banks if you're taking people from the other banks. And I go, no, there are some really great people who've been trapped within the structures and the confines of some of the big banks. Our job is to release them from those constraints and let them get on with building something that's really great for customers, but using their experience and expertise in credit risk, market risk, operational risk, all of the other aspects of risk that make up running a bank. So I make no apology for the fact that within 86,400, about half of the roughly 90 people we have today from technology, and the other half are from a banking background. They are senior people who've worked in big roles in other banks, who were happy to leave those roles because they thought that in a better environment, they could do a better job for their customers.
You have an interesting perspective, I imagine, having gone first through the Metro experience, then through the Atom experience. Metro being a bit of self-funding, a bit of raising money from investors without kind of any sort of strategic alignment with an incumbent, and the approach was kind of that taken in much early fintech, which was kind of, we can do this independently and better than the incumbents, and we can disrupt. Atom may or may not have had a similar approach early on. Over time, you developed an important strategic partnership, strategic investor relationship with BBVA. All signs kind of point to BBVA continuing to invest in Atom. As you think forward to this new venture, kind of the pros and cons of going it alone and kind of seeking to disrupt incumbents versus looking for opportunities for partnership, how do you think about those two potential options?
There isn't a right or a wrong route there, Will. Rebank started with a broad shareholder base, as did Atom. One of the early cornerstone investors was BBVA, as you rightly pointed out. BBVA looked long and hard at the UK, a market that they weren't in. They believed that Atom had the best chance of the range of new entrants they looked at the time, and came in as a 20% cornerstone shareholder. Over time, they've raised their position in the company. I think today it's around about 38%. Bear in mind, of course, that I stepped down as chairman at the end of last year, so about 12 months ago. But at the time, my belief was that BBVA were a great company globally, that they really understood that were delivering a new digital world across the continents, that they were a great supporter, advocate of the Atom model, and were able to bring a lot of resources, skills and expertise to bear over and above the capital that they brought. Now, I've no crystal ball, but I suspect the most likely outcome for Atom is that at some future point it will be purchased by BBVA. And that will be I would imagine, a great result for the customers, for the shareholders, and I'd like to think for BBVA. So I don't think there is a right or wrong approach to this. Banks are very, very capital consumptive. Growing banks need large amounts of capital. Over the last 11 years, I've raised about $1 billion, and none of it was easy. Raising money is difficult. So I don't think there is a right or wrong route. You look to find the providers of capital, ideally, who believe in your management team, who believe in the business, and who will be long-term supporters. Yeah. Whether they're entirely independent providers of capital or banks, I don't think really matters. You take a view as to what is most appropriate and best for the business that you're building at the time.
Do you have a hunch based on your early experience in Australia as to where the majority of your investment capital is likely to come from?
Well, we are very fortunate in as much as we are currently 100% owned by Australia's largest independent payments provider. Not many people have heard of them, but the government regard them as the fifth most systemically important bank in Australia. Cuscal itself has a banking license because of the fact that they provide services to over 100 financial institutions. So they've provided us with the capital, they've provided us with a lot of resources, expertise, and support. Now, being an ADI, being a bank in their own right, they've recognized that over time they will need to reduce their shareholding ultimately to below 15%. But they remain absolute supporters, and I think new shareholders who come in will take a great deal of comfort from knowing that Cuscal stand behind us and continue to invest in us.
Yeah. As an outsider, I've always been fascinated by the relationship that you guys at Atom built with will.i.am. And I suppose part of me wonders if that was Anthony, the marketer. It would be interesting to hear how that relationship developed and the value that you saw in that.
I was sitting at home one Friday evening in Somerset, having a glass of wine, playing a game that you do as a marketer, which is, if Atom were a person, what would be those human qualities, the anthropomorphic qualities you would associate with us? And I was thinking, it would need to be somebody very technically savvy, somebody who lives in a digital environment, somebody who really gets that the future is going to be digital. And he sprung into my mind, and I thought, oh, that's a great idea. I'll put him to one side for a moment. But the more I thought about it, and the more I started to look into him, the better a fit it seemed to be, because everybody knows him as a 7 times Grammy Award winner, one of the biggest downloaded singles ever. Not many people know that he is a tech advocate. He's got 250 people working in artificial intelligence from Los Angeles through India, through Singapore. And he has a real vision of the future of technology and the role it plays in people's lives. He's talked regularly at Davos about it. So the more I looked at it, the more he seemed to be an incredibly good fit. To cut a long story very short, I got to meet him. I pitched the idea of what we were doing, and he really loved it, to the point that he became an investor in effect, in the business.
Excellent. We'll see if you have anything similar in store for 86400 in the future.
Yeah, Will was the right time and the right place for Atom. I think we have a different model here, and I think our approach to it will be slightly different.
Yeah.
But Will remains a good friend of mine. I still speak to him regularly, and still very impressed by his vision and view of the digital world.
Yeah. Well, look, to wrap up, I'd be interested to hear from you based on your early experience with Metro, which was very much branch-based, smiling humans, dog biscuits, and a friendly atmosphere. Atom, very much app only, kind of leading edge of that wave. As you think forward about banking and the way propositions are likely to evolve, do you have any thoughts that you'd leave us with?
Yeah, I mean, the world has moved on from branch-based banking. People used to have high-touch relationships with their bank, which meant leaving their home or their office, getting a bus, walking to the high street, going into a branch. Today's young consumers, that's a complete anathema. They fully expect to be able to do everything that they want on that ubiquitous device that sits in their pocket, on their bedside table, on the desk next to them when they're in the office. And we can now provide that high touch, that intimate experience that people want through that digital platform, be it through instant messaging, be it through video links, be it through the way in which people interact with their app. And the reality is most people just want to do it in a frictionless, simple and easy way. They're not bothered about talking to someone unless they have a problem and then they really want to talk to someone. So 99% of everybody's transactions will be done via the app. And for those people who have a problem, something unusual or unfortunate in their life, perhaps a bereavement, at times like that, when they want to talk to a human being, you can make that available to them wherever they are, whenever they want it, through the app.
Anthony, where can people find out more about you and 86400?
86400 has its own website, www.86400.com.au. I'm on LinkedIn and always very happy to connect with people and have conversations.
Excellent. Anthony Thomson, thank you very much for joining us today.
Will, thank you so much for the opportunity.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.